We are starting, Akiti, right?
Yes,
You
okay.
can admit everybody and then let me know once you're putting it on live. Just mention it once you're putting it live.
Yeah. So I've admitted everyone. They're just coming in.
Once we have people on board, just let me know. I'll just start it then.
Yeah.
So I think we can start.
Yes, sir.
Right. Thank you so much. Hi. Good afternoon, everybody. Thank you so much for joining us in this webinar, which we have specifically hosted to cover the new provisions of the Income Tax Act under Section 194I, 194R, which is casting an additional obligation on the payer to withhold taxes in terms of making payment to any residents when it comes to payments which are in the nature of benefit and perquisites. Now, these provisions had been enacted by Finance Act 2022. At that time, subsection 2 of 194R gave the powers to the lawmakers to bring in the circular or any clarifications which will give the understanding of the implementation of this section. So a lot of inputs were taken from the trade bodies, from the business associations. Basis those inputs on 16th June 2022, circular number 12 of 2022 was published and put for the public in terms of understanding the implementation of section 194I, 194R. For this circular, it provides different instances. It provides the valuation criteria of these perquisites, how we have to value under different circumstances. It provides the benchmarking of whether to check it, whether the taxability has to be seen from the recipient's perspective or not. It also tells us how to treat the discounts, rebates, etc. when it comes to the interpretation of 194R. So all these things have been covered in the circular, which we will try to discuss and understand amongst ourselves while you'll be participating in terms of our understanding also. We'll try to keep it a 45 minutes presentation. So hopefully we will wrap it up by 4:15. Last 15 minutes we are keeping for the question answers. So all the questions that you want to ask us, you can put it in the chat lobby. So we will collate those questions. I'll narrate those questions at the end of the session and we will try to answer those questions. Will have to give us that opportunity of understanding and learning along with you. So definitely we may not be able to give you 100% answers, but definitely we try to justify basis our understanding. Whatever is pending in terms of the answers, we'll try to reply to you one to one. You will have our contact details at the end of the session and you can accordingly communicate with us. If you can move to the first slide, Deepak. So this is the definition of section 194R, uh, which we have tried to capture in different blocks. So when I read this definition of section 194R, it tells us the applicability. It is effective 1st July 2022. It tells us that to whom it shall be applicable. It shall be applicable to the persons. It shall be applicable when the payer is making a payment to a resident. It tells us whether it will be applicable only on cash payments or it will be also applicable on payments in kind. So it says payment in cash, kind, partly in cash, partly in kind. And it tells us whether it is applicable on non-resident payees or not, to which the answer is no, it is not applicable to a non-resident pay. The scope has been specifically restricted to the resident payees. Now, basis this definition that the 194R has been enacted, there are certain issues, there are certain clarification that has been provided, there are certain points of debate, points of understanding, and points which we think might be litigious at the times to come, which we have tried to capture in our slides going forward from this point onwards. I will from this point onwards request Deepak, my colleague, and Shireen, my from our team who will be taking forward this presentation. And once we are done with this presentation, we'll take the questions there and then, and we'll try to answer those questions. So over to you, Deepak and Shireen. Please take it forward. Thank you so much.
Hi, good afternoon, everyone. Basically, deep diving into what Saurav sir gave an introduction about this section per se. Now we'll just first go into the breakdown of the provisions of the Act over here. 194R has been inserted and it imposes a rate of 10% of withholding that needs to be made on any benefit or perquisite that is arising during the course of business or profession. As he already mentioned, it will be applicable from 1st July 2022 itself. Now over here, the person that is the payer is the person who is liable to deduct the TDS. He's the person who's providing the benefit or the perquisite. This person can be any person and it will include a non-resident. The only exception provided for a payer is an individual or HUF whose total sales, gross turnover or receipts does not exceed 1 crore in case of business or 50 lakhs in case of a profession, in case of someone who is engaged in profession. Now, the person who is receiving the benefit is the payee, and this person has to be a resident. Further, the modes that have been discussed for the benefit or the perquisite are that it can be in cash, partly in kind, or wholly in kind. The threshold over here is that the benefit or perquisite wherein it exceeds 20,000 in a year, that is when this TDS provision gets triggered. But to compute this 20,000 threshold, all benefits and perquisites made to a recipient or a payee have to be taken into consideration from 1st April 2022 itself. And also it has been said that the payer has to ensure that the wherein if the benefit or perquisite is wholly in kind or partly in cash and partly in kind, but the component of cash is not enough to meet the TDS liability, then the payer has to ensure that the payment of tax has been made by the recipient themselves and then only release this benefit or perquisite. Now Deepak will be taking us forward.
So thank you, Shireen, for providing your view. So there is one thing that in this section that there is a debate around the applicability of this section, whether it is applicable on all payments, whether if you are making a payment to a customer, then it is applicable, or there should be a business to business nexus to apply this section. So I'll just briefly talk about the memorandum, what it says. So the memorandum says that section 28, subsection 4, it talks about the benefit of a visit that we provide to a person in a day-to-day business. So it is referring to section 28(4) here. That means we can say that the provisions will apply where if a business is making payment or the benefit or purchase it to a person who is in the business only. So I'll just read a few of the lines of this a memorandum. It says that as per clause 4 of section 28 of the act, the value of any benefit or perquisite, whether convertible into money or not, arising from business or exercise of profession. It says arising from business or exercise of profession is to be charged as business income in the hands of the recipient of such benefits or perquisite. So here through this section, they are targeting those payments which are covered in section 28 subsection 4, which were otherwise not getting taxed. So only the payments which are arising out of business or profession. So if a professional is exercising their business, they're providing service to some company or to a firm or to any organization, and that organization is providing the benefit or perquisite to that consultant, then only the perquisite would arise. But if there is a case whether there is a scheme going on, a business is providing some kind of benefits to the customers. So in that case, section 194R will not trigger. So it will not be said that they have provided this benefit, which would be termed as perquisite. So this memorandum clearly says that it is the business nexus that you need to see. You need to see that the payment that you are making it is in the course of business only. You are availing certain kind of services from the other person, or you are availing goods from other person, and you are providing those benefits. So this is how I am reading this memorandum, and there are certain views also where we can say that irrespective of the nature or irrespective of the relationship you are having with the other person, that needs to be applicable, like the benefit of perquisite has to be construed under section 184R only. But from what I read from in this memorandum, it clearly says that it is applicable only in cases where it is arising out of business or profession, and the profession or business that is exercised by the person who is receiving these payments. So I'll just move to the next slide. So we will discuss about the clarifications which CBDT has issued. So there are certain questions which I'll start with. So first one that they have catered here is that is it necessary for the taxpayer to check whether it is taxable under section 28(4)? So the way we discussed in the earlier slide, like the memorandum says that there were certain payments, there were certain benefits, or there were certain perquisites which the other person used to receive, but they were quite unreported. I mean, they did not use to report that amount in their income. So irrespective, you don't need to check. You don't need to check whether it is taxable in the hands of the other person or not. You just need to check whether it qualifies as benefit or perquisite, whether it is covered under section 194R. If it is covered, if it qualifies as perquisite or benefit, then irrespective of the taxability, you need to deduct TDS on that. You can't just see whether it is taxable or not in the hands of the other person. It will just create unnecessary burden on the taxpayer, who is the person who is deducting TDS. So the government has simply said that you don't need to see whether it is taxable or not. So I'll move to the next question. So it says, is it mandatory for the benefit of perquisite to be in kind? So if I move to section 28(4), 28(4) clearly says that it is applicable on those kind of benefits or perquisites which are in kind. It says the benefit of perquisite whether convertible into money or not. So it is clearly referring to those perquisites only which are in kind only. But here through this clarification, the CBDT has clarified that it is not mandatory for a benefit or perquisite to be in kind. It can be a cash benefit, any kind of benefit that you are providing. You just need to deduct TDS if it falls under the definition of perquisite or benefit. So I'll move to my next question, which CBDT has clarified. It's that applicability of section 194R, where the asset or where the benefit to you are providing to other person is in the form of a capital asset. So the CBDT has clarified that the taxpayer or the deductor, they don't need to check whether it is a capital asset or not. Any kind of asset, any kind of benefit or anything that you are providing, be it an iPhone or anything, laptop, cars, whatever you are providing, you don't need to check the nature of that asset. You need to deduct TDS on that particular benefit if it qualifies as benefit or perquisite. So I'll move to next slide, and I'll just request my colleague Shireen to just take it up.
The next clarity that has been provided by the CBDT is whether cash discounts, sales discounts, and rebates are classified as benefits or perquisites, and 194R becomes applicable in that case or not. Now, technically, these are benefits or perquisites, but the CBDT has clarified that a discount on price, whether it is in the form of a price adjustment, say the price has been reduced, a good was worth 20,000, but you've given it for 15,000, that price adjustment, or something has been given for free. You buy two goods, you get one good free. These have been specifically excluded only for the ease of compliances. This exception has, however, not been extended to free samples. So wherein free samples are being distributed, that in that situation, it will be seen as a benefit and perquisite, and 194R will get triggered and TDS will have to be withheld. Now, also the clarification provided by the CBDT in this case is that when a benefit or a perquisite is either given to, say, an employer, to an employee, the owner or a director of a company, but they have gotten it because of their relationship with the entity, then TDS has to be deducted in the name of the entity. This was also said for doctors. Say a pharma company is providing free samples to free medicine samples to doctors. It said that the TDS by the pharma company has to be deducted in name of the hospital, and the hospital can further deduct the TDS of the doctor under section 17, wherein the doctor is an employee of the hospital, or under section 194R only, where the doctor is working for the hospital in the nature of a consultant. Now, one question that does come to mind over here is that when you give free samples to a doctor, which are free medicine samples, those are stamped and cannot be sold further. So they technically may not be of any benefit to the doctor per se, and they're just kept in their cabin to read what forms part of that medicine. So with clubbing it in there and saying that this is a part of their, income, and it is a benefit or a perquisite arising in their hands, will that be fair is something we need to look at. Deepak, please.
Yeah, thank you. So I'll move to the next clarification that CBDT has provided, and it is one of the most important clarification that they have provided. So the people were concerned that how they will value the benefit or perquisite which they have provided during the course of the business. So CBDT has fairly clarified that the valuation of that perquisite has to be done on the fair market value, but they have provided some exceptions also. So where you have purchased that item before providing it to the recipient, then the value of that perquisite would be the purchase price only if it is available and you have purchased it. And where in case this is something which is manufactured by the manufacturer only, or the organization which is providing this benefit has been manufacturing it. So the valuation would depend on the price that you generally charge from the customers. So this is how they have clarified on this question. And one more thing that has been clarified here, that the valuation should be exclusive of GST. Like if the part of GST is involved on that benefit, then that has to be excluded for the purpose of calculation of this value of perquisite. So I'll move to the next question. So there are many cases where certain companies provide their products to some social media influencers so that they can use it while making, say, reels on Instagram or shorts on YouTube, or they can also provide them so that they can go out in public or the events, and they are actually using their products, like the headphones that they can provide which they are using in public, or the cell phone they can provide, or anything that they can use, and the reachability of that product is increasing. So is it something that needs to become under the purview of perquisite? So CBDT has clarified that it would be classified as perquisite if that social media influencer has kept it and they have not returned it to the company. So where they have kept it, it should be classified as perquisite, and the due TDS needs to be deducted. But if it is a case where the post uses of a particular time period, say 15 days, 30 days, 2 months, then in that case, if they have returned, then it should not be a case where you need to deduct TDS. So this is something which they have clarified here. So I'll move to the next slide, and I'll request my colleague Shireen to take it up further.
Thanks.
Hmm.
So the next question, which is creating a lot of buzz, is whether reimbursements out of pocket expense, which are incurred by any service provider during the course of rendering of services, are those benefits or perquisites. What the CBTT has clarified is you have to look into whose obligation it was and who has met this obligation. So now, but the example that has been given in the circular talks about looking into the obligation with respect to whose name the invoice comes into. So going into this, there is a consultant who is rendering services to a company, and for rendering such services, they have incurred some kind of boarding and lodging expenses. The circular says that where the invoice is in the name of the company and has been paid by the consultant and later reimbursed to the consultant, such a transaction will not be a benefit or a perquisite, and over there 194R will not be applicable. But where the invoice is in the name uh, of the company and payment has been made by the by and for sorry I, I will go and do this again. So where the invoice is in the name of the company and over there, the payment has been made by the consultant and this has been reimbursed by the company. It is not a benefit or a perquisite. And 194R will not be applicable. But where say the invoice is in the name of the consultant and the payment has been made by the company either directly to the vendor or reimbursed to the consultant. In such a case, it will be construed as a benefit or a perquisite for the consultant in this scenario, and section 194R will be applicable and TDS will have to be withheld in such a case. Deepak, please take it forward.
Sure, thank you. So I'll move to the next clarification. So the two last clarification that CBDT has provided. So first one is related to the dealer conferences that companies usually held to educate their dealers about the product or the services that the company is provided. So whether that would also classify as the perquisite. So in that case, CBDT has clarified that where the prime objective is to educate the dealers about the products of the company, that the conference is being held where you showcase your products, your services, and you made them aware about the products, the functioning of the product, the services that you provide, so that they can go in the market. The customer comes to them, they are able to answer their questions, they are able to make them understand about the product, the services that they are providing. So if it is solely for that purpose only, then in that case, all the expenses which have been incurred for that purpose will not be construed as benefit or perquisite. But where in case the company is providing some kind of incentive to the dealers, so to the select dealers, like if there is a dealer who has achieved a certain milestone, like they have achieved a target of say 1000 units, or they have engaged 1000 customers, or the services of the company are doing good through those dealers, and the company is providing some kind of benefits to them, like they are providing free tickets, free passes to them, they're organizing trips to them for their families, and they're providing some kind of assets to them like the iPhones, laptops, tablets, or even if they're providing cars to that dealer. So that will not be construed that it is just to educate the dealers, or this is something which is an incentive which is being provided to the dealers for the good work that they have done. So here's surely this part would be considered as benefit or perquisite. So in this case, this amount will qualify here, and TDS would be deducted accordingly. But there are cases where suppose there is a conference which is going to be held from 2nd of July to 5th of July. But there are cases where the dealers are coming one day before. The stay that has been provided to them starts from 1st of July only, and the event is being started from 2nd of July. Then how the company would classify, how would they see the expenses which they've incurred? Because the event is being started from 2nd of July, but they are in hotel on from 1st of July onwards. So in that case, 1st of July, the expenses which have been incurred on 1st of July would be construed at perquisite in the hands of those dealers. So this is something which government should classify. So how the companies will take up this situation, how to classify from 1st of July to the rest of the period where actually this conference is being held. So this is something which needs to be looked into, that how this perquisite would be valued in that case. And another situation can be where the dealers or the persons are allowed to take their family with them. I mean, they're allowed that the wives, their children can join that conference. So how that in that case this perquisite would be determined, because you need to bifurcate between the expense which has been incurred toward that conference and the expense which have been incurred towards the expenses on that family. So normally the hotels provide the bundle of package, like they provide stay facility, you can use the swimming pool, their hotel rooms. So this is something which would be kind of tricky, which will create certain kind of questions in the mind of taxpayers. So this is something which needs to be looked into. So I'll move to my next clarification here about the compliance, how the compliance would be done here in this case. So Shireen initially mentioned that the deductor needs to ensure that TDS has been deducted before releasing the payment or before providing the benefit. But in case where the cash component is not sufficient, or where the perquisite or the benefit is wholly in kind, then how would the person would determine that tax has been deposited? So here in that case, what we can do, we can ask for a declaration from the person who is availing those benefits. We will ask for the challan of advance tax payment which they have paid towards that income. What we will do, we will report that challan in a the TDS returns, which is 26, which is 26Q in that case. We will provide the details of the challan which they have paid along with the deducted details. And the gross up option is also available in case it is being borne by the company. But where in case that advanced tax challan thing is in question, we are going through that route only, then I think it will create unnecessary burden on the deductors. So suppose there are the 1000 dealers and you have provided them with a cell phone which is in excess of rupees 20,000, and you have to seek 1000 advanced tax challan from those deductees from the beneficiary, then you will have to report those 1000 advanced tax challans in your TDS return, and mapping is also needs to be done in that TDS return. So I think this is going to be a voluminous task for the taxpayer, for the deductors. So I think this will increase compliance burden, which is already quite there with the introduction of other sections and the other compliance which the deductors do on a day-to-day basis. So this should be looked into, I think. So I'll move to the next slide here. Shireen, please.
So now here we've just put in some instances of benefits or perquisites wherein this section will get triggered, and should it get triggered. We will run through all of these. The first is a set of goods which includes cars, TVs, gold, coins, mobile phones. When these are given and they are arising in the course of business or profession, they should definitely come under the purview of 194R. Then a sponsorship of trip to the recipient, and even his family members included, or just him, or there also 194R will get triggered. Free tickets to an event, IPL tickets, all of these will trigger 194R. Then there are a lot of times that free accommodation is given, free meals are given, shopping vouchers, Amazon vouchers are given. All of these do come under the definition of benefits or perquisites. There are free products given to influencers. These products may or may not be related to the the business of the service provide of the person who's providing this benefit or perquisite, but still they will become a benefit or perquisite in the hands of the influencers. Free samples has been specifically mentioned in the CBDT circular to become a part of benefits and perquisites, and free medicine samples to doctors. Like we discussed before, they may not actually be of any real benefit or perquisite if, to the doctor themselves when they cannot sell it further. So this is something that really needs to be looked into. A few other matters which may be litigative is when there is some write-off of debtors that is done. This write-off of bad debts, will that be considered as a benefit or perquisite? Will need to be looked into. Then also it says that, like Deepak also discussed the compliances right now, a benefit or a perquisite has, before release of a benefit or a perquisite, you have to deduct the TDS. But what if the release was done before 1st of July, but it has not been recorded in the books of till now? Does now the recording of in the books trigger something, and will TDS now need to be deducted and paid out of your own pockets? We will have to look into all of these matters.
And there's one thing also, Shireen, if the influencer has kept that item with him, and there is an agreement that after the period of 2 months, they will return that particular product to the company, but they haven't returned. So would it mean that we will have to pay interest on that as well, because the person hasn't returned that product, and there's a liability on me to deduct TDS.
Yeah, that could trigger interest,
Yeah.
and also because the obligation on the other side has not been met, but that does lead to it being a benefit or a perquisite. But that will
Yeah,
have
right.
to be seen how that, in a situation like that, how do you handle?
Right.
I think what I can understand from the presentation that has been taken is that there's more confusion than the clarification that circular has created. So if I have to pinpoint a few issues that has been highlighted is one, what I can understand is the trigger point of withholding of taxes where the goods are given as free samples and are subject to return. Now you have given the goods in the month of January. They are supposed to be returned in the month of June. What is the trigger point of taxation? Will it be at the point of return? Because at the point of return, if the goods are to be returned, there is no withholding tax requirement. But suppose the goods are not returned, then will you withhold taxes from January onwards and calculate interest or not? Or will you withhold it in the June month when the contract to return was supposed to expire and you haven't returned those goods? This is one. Then where the goods are, where there are bad debts, where there's a compensation for termination of contract, whether that can be taken as a benefit or perquisite from the perspective of the from the perspective of the payer, the person to whom such payment is being made, whether it will be forming a part of withholding tax liability under 194R or not. As on today, there is no obligation on the person who is doing a bad debt entry in its books of account to withhold any taxes. Compensation for termination of contract does not cover under withholding of tax provision under the Income Tax Act. So what will be the outcome of these things, which we have to understand it? Because eventually it is a benefit that has been given in the hands of the recipient, where you are paying certain compensations for the contract terminations. So having said that, there are definitely a lot of clarifications that are still required. There are issues which are very litigative, which we in which at the lack of clarification will definitely have a different point of view that a taxpayer will adopt, considering practicality, a different point of view that the letter of law as on provides or letter of law is absent on. So in these cases, it is very difficult for us to conclude on these points, and I'm hoping as and when this section is implemented and the clarifications are given in the due course of time, because there will be a lot of challenges that we will see. We don't want any other points to be added to the already very litigious Income Tax Act. But definitely we are not seeing anything like a green signal from these clarification that has been given to us. Every payment will be a subjective payment. Every payment will have a different interpretation. There can be interpretations where an invoice has been raised You are making a payment towards fee for technical services. There's a component of reimbursement. Can a person take a position to say that I will withhold taxes on the entire amount under 2% instead of going for a 2% and 10% withholding on 194R, because the provisions of 194R says 10% withholding tax of rate. So can a beneficial interpretation be taken to say that if I have done the compliances of withholding taxes on the entire invoice, including the reimbursements at 2%, because these reimbursements were the bills which were not in the name of the payer, which were not in the name of the payee. Therefore, I will take it as a safeguard option of 2%, or will it be a 2% on the fee for technical services, 10% on the 194R payment, which has been classified as reimbursements now. So these are the things which we have to really understand. We have to really answer to ourselves by making every transaction, every payments. There are a lot of questions that I have seen in chat windows. So I'll just try to take those questions. What I've done is, while the questions were given to us, I've tried to bunch those questions into a few categories. So one, the common question that is being asked is in terms of the bills which we pay for the internal auditors, the vouchers that we at times give for making further purchases. Will those vouchers, will those reimbursements be constituted from the perspective of 194R as a benefit or perquisite? I think to my understanding, the answer is any reimbursement made not having an invoice in the name of the pay will qualify as a benefit or perquisite and will be subject to 194R payment. It can be in any shape or form, irrespective whether it is paid through, whether it is in vouchers shape, whether it is in shape of cash payment. Any shape or form will not change the consequences of this. Then there are questions which I can see in terms of reversal of sales impact, credit notes being issued, debit notes being issued, etc. I think circular is very, very clear on the discounts, rebates, etc., that these will not qualify as a benefit or perquisite for the purposes of 194R. So taking that persuasive reference in our favor, we can say that any sales discount given, debit note issued, sales reversal that has happened, these are not the benefits which will be allowed, which will be allowed to be included under 194R definition. Therefore, there is no requirement to withhold taxes. Credit period increase from 28 days to 60 days. Increase in credit amount, increase in credit period again is not a benefit or perquisite which should be included for the purposes of 194R reduction, because we have to understand to say that the intention of the legislature and the intention of the act is not to tax every transaction under the universe. The intention, if we analyze this, basically those transactions for which you were otherwise eligible to be to declared as your income in the income tax return are getting escaped, has to be taxed. Increasing credit period will never be an eligible transaction for the purposes of benefit or perquisite. It may be an intangible benefit, but definitely not a benefit which can be having a tangibility to it. Therefore, we can safely take an assumption to say credit period will not be included for the purpose of benefit or perquisites. Then if I have to understand from the valuation perspective, one question that triggers me to mention before the audiences is that if there are certain items that have been used to provide as free samples, which are having a book value less depreciation that we have recorded, what will be the valuation for the purposes of 194R? I think what I am able to remember and recollect is, Deepak, just correct me if I'm wrong somewhere, Shireen, just correct me. Valuation has given two prescribed mechanisms. One is where the goods are being given, which you have purchased it yourself, and where you are a manufacturer of those goods and then you are provided as free sample. So where I am a manufacturer, I am providing it as free sample. It is the purchase price of the customer that has to be taken as a valuation. Where I have purchased it and then given as a free sample, it is my purchase cost and not the sales price to the customer. These are the two primary criteria. Now, when I put these two criteria to the question that has been asked, it's a book value. Certain depreciation has been charged on those goods, and now the goods are being given as a free sample. To my understanding, the cost of goods as on today will be the good value of purchase less the depreciation. So that should be taken as the valuation for the purposes of determining the withholding tax obligation under 194R. If I had purchased those goods 3 years back at X price, but I never gave those goods as samples in those 3 years, but now the cost of purchase as on today for this 3 years gold is X minus the depreciation. So it should be the X minus depreciation price that has to be taken care of as the purposes of 194R, because we have to appreciate I am giving the goods which have been used by me over the period of time. So if I take those goods at a valuation that I have purchased for, it will not be justifiable for me to withhold taxes at that price, because if similar kind of goods, which is a 3 year used goods, are now purchased by me, definitely the price will be different from what I have purchased. Taking that as an analogy, I can say that it will be the purchase price minus 3 years depreciation to be taken as the valuation for the purposes of calculating 194R obligation. Now, after that, there are certain, I think what one question that again triggers my point is there are certain site visits that you generally undertake for the lenders and for the for the project developers, whether the expenses that are being borne by the company will be falling under the bracket of 194R or not. I think to my understanding is if you are incurring certain expenses in the furtherance of a business and you're not incurring those expenses on behalf of the people to whom these expenses are to be incurred for, I think we can save ourselves from 194R. So what I'm doing is I'm organizing a lender's visit to my site. While those lenders are visiting my site or while those project developers are visiting my site, this is something an expense that I'm incurring to the furtherance of my business activity and not providing any benefit to these lenders. But where the obligation is of the lenders to visit the site or the project developers to visit the site, and I organize that site visit, then I can say that 194R becomes an obligation because I have incurred a certain expenditure which is a benefit of purpose to these people otherwise, which would have been otherwise their cost. So it all depends upon how the contract has been signed. It all depends upon what are the obligations, who is casting these obligations on each other. Basis that the 194R provisions can trigger. Uh, I think other than that, mm, more questions if I have to see is I think reimbursement of business travel expenses taken by employees of a company. I think employees have a specific exception if I'm not mistaken. So employees are not to be included for the purposes of 194R, and therefore employees are out of the purview of 194R. But if you are in the capacity of a consultant, then 194R provisions will trigger. Other than that, mm, I think we have tried to cover most of the questions. Any question that we are right now missing? Deepak, you want to add something to what I've said? Srini, anything that you want to add to it?
So there's one question that has been
Hmm.
asked in this.
Hmm.
I'll just repeat it just a second.
Hmm.
So the question is if you have been using certain kind of depreciable assets in your
Hmm.
organization, is your office, and
Hmm.
you have made like furniture fittings,
Hmm.
and after the contract period is over, you have to vacate that site. So you have to leave those furnitures.
Hmm.
How would you treat those furnitures which you have given to the person who is going to avail those that particular space? So how would it come under the purview of perquisite or not? If I've understood the question correctly.
I think if you are giving away certain furniture fittings while you are shifting your office from place A to place B, it is not a benefit or purpose that you are giving to the recipient of such goods. So I think we have to interpret the provisions in a complete harmony, and we cannot stretch it to say that I have given any benefit to the person who will be shifting at that place now after I have vacated the premises. The intention of the legislature to formulate section 194R is to tax or withhold cast withholding tax obligation on those transactions which are in due course of a business. So it is not my business to provide these furniture and fittings to the person who will be shifting on my place. It is something which is incidental and should not be in the purview of warranty for us. This is my understanding, and it may be subject to debate or subject to different interpretation, but this is what I am able to understand reading the provisions. I think one question that has been asked is whether the CSI expenses will be covered under the purview of warranty for R. To my understanding, CSI expenses should not be covered under the purview of warranty for R because you're not providing any benefit or perquisite to the person to whom such payments are being made. Therefore, warranty for R should not apply on those type of expenses. Uh, So I think again the question that so I think we are very clear on this point. Employees are out of the purview of 194R. So any benefit or perquisite given to the employees will have their implications under section 14 read with section 17, but not under section 194R. So withholding tax application will have under section 192. 194R is not to be covered on these purposes. Free lunch and dinner to the customers, will it be covered under the warranty for hours? So I think free lunch and dinner to the customers, again, it is that whether it is a benefit that I was obliged to give or whether it is something that I'm undertaking as a business promotion expenses. If it's a benefit that I'm obliged to give, that means my contract specifically covers these type of payments that I need to give as a reimbursement or as I incur this. If I'm incurring this as a cost, in that case, there is no withholding tax obligation because we have to appreciate where these expenses are incurred by those consultants themselves. Only then it is covered under 194R. But where these expenses are incurred by those consultants and bill are in your name, again, there will be no requirement to withhold taxes. So if I apply the same analogy over here also, where a company has incurred expense, that means the bills are in the name of the company. Therefore, there is no requirement for you to withhold taxes under 194R. Where these expenses have been incurred and sought as a reimbursement, then there will be a requirement to withhold taxes. Therefore, we can distinguish it on this basis to say that food and lunches and the office premises to a consultant should not be under 194R. Uh, I think we have covered most of the questions in this. If there is anything that I'm missing, maybe we can, Deepak, you can come to the last slide to put our contact details. Maybe people can ask the question over there. So we have our contact email ID over here. Definitely the questions can be put across to us. We'll be happy to answer those questions. It will be a learning for us also to understand these questions and answer those questions. We may not be 100% correct. We'll try to 100% justified while we're answering those questions. It's a provisions which are subject to multiple interpretation as on today due to the minimum clarifications or minimum jurisprudence that or the nil jurisprudence that we have. I think most of the times how we understand the Income Tax Act is through the jurisprudence, less by reading the provisions, more by understanding the jurisprudence. So since we have lack of jurisprudence as on today, therefore I can understand the anxiety that we are all going through. Definitely, it's a learning curve for all of us. We have to understand the letter of law, how it has to be interpreted, how it has to be read. I personally feel that there is nothing to panic about the way the business transactions are being done. You just have to justify your understanding to say whether I'm supposed to incur that expenditure in my business activity, whether it is an expenditure that was supposed to be incurred by person X, whereas I'm incurring it. If that is the answer you are able to give it to yourself, the 190 for R provision will automatically be answered whether it will come into play or not. And I think gift to sisters, cash, online amount, I think gifts and all to sisters and all are not the intention of the provisions to be covered for. So definitely we can skip those type of things. And basis that I think we have answered, tried to answer most of the questions. Still, if there's any pendency left, you can drop us a line of email. We'll be happy to answer those questions. And thank you so much for to everybody for attending this webinar. It's been a great learning experience for us from the questions that you have asked. It gives us a perspective to think from a multiple variety. We have definitely conducted a few one-to-one sessions with our key clients where we have tried to decipher these provisions and we have tried to gain our understandings from these clients itself, because many a times it is you people who ask these questions to us, which makes us understand, and which makes us think in the direction where we otherwise cannot think, and it is your experience which makes us a more wiser in terms of answering these questions. Thanks a lot, everybody. Thank you, Shireen. Thank you, Deepak. And thank you to the SW team for organizing it so well. Thank you, everybody. Thanks a lot.
Thank you.